You think we took this leg lower in the market just as we were coming on the air because of the technical damage that was done, breaking below the 200-day?
I do. And I think the legitimate reasons is the message that the yield curve is sending that triggered selling yesterday. And no question, from a technical basis, you're correct on breaking that 200-day. We've already had the Russell 2000 break its 200-day. We've had the transports break its 200-day. We have the NASDAQ basically sitting on it.
I mean, is this December all over again, like we were asking, the folks who are sitting right in front of me? Are you starting to worry about that?
Well, the difference this time is that December, there were worries that the Fed was going to overdo it. Now those worries are being realized, and we're seeing the slowdown in global growth. And also, of course, December, you were worried about the China trade deal, and now it's actually probably worse today between the two sides than it was in December. Now, I'm not saying we're going to retest those December lows, but this is not a time to be complacent.
Yeah. What do you think about the notion that Dr. J puts forth the Fed's going to cut rates twice? The situation is going to start deteriorating to the point where the Fed's hand's going to be forced to cut rates.
Well, the bond market's already essentially cut rates.
Yes.
If you're looking at the housing market, the average 30-year mortgage rate is priced off the 10-year Treasury. Well, they've essentially cut rates. So when you look at the most interest rate sensitive areas of the economy, it's housing, it's autos. Will a rate cut rejuvenate the auto sector? Probably not, because it's got other issues. So while it may have a psychological impact, look at the last two rate cutting cycles. It's not when you wanted to be buying stocks. It's not something that you wanted to celebrate, because you have to ask yourself, why are they doing it? And we're at the point globally with all these central banks that it's just pushing on a string at this point. Interest rates are already so low. What behavior is it going to incentivize other than speculation in the stock market? It's certainly not going to really do anything for actual growth.